Hi everybody, this is Dennis Wilborn from the Active Trend Traders, and with me today, as usual on our Friday How to Make Money in Trading Stocks, Market Stock Talk, is David Grandy from All About Trends. Hi Dave.
Good afternoon, Dennis. How are you doing?
Hey, it's a beautiful day. You know, the market's in correction, the positions are light, and we're just waiting to see what's going to happen over the next few days and few weeks.
Yep.
It's kind of an interesting time of year, and I think the advice, or not the advice, the observations we were making last week about it's a good time to kind of like rest and relax and take some time off. You know, get a couple of trades in. You guys made some great trades this week, so I'm taking your advice. I'm researching a lot of stuff right now.
That's exactly what that's the best way to handle times like this when you're in the market, when your trading rules take you out of the market and put you in cash. Cash is a position, and
Gotcha.
these are times where when we're in a lot of cash, it's great to do exactly that. Just review past trades, start building your watch list, and just relax and recharge your batteries and go out and do fun things with people that you enjoy doing them with.
Yeah, and I know you're making a presentation this weekend with the Trading Options for Profit group down in San Jose, and I know your presentation will be really great. And then I'm taking off for Monterey to play in a golf tournament tomorrow.
Awesome.
Cool. So hey, let's stop dilly-dallying. Let's get back to business here. I want to remind everybody that all the materials Dave and I do talk about are for educational purposes and training purposes only, and that if you are going to trade any new system, please do paper trade it. Get used to paper trading. And you know, I was telling you that I've been helping my sister-in-law, my wife's twin sister, learn how to trade, right? And my objective in helping her learn how to trade is to have her up and trading live money within 90 days. And she has never traded a stock in her life, never had a brokerage account. And it's really kind of fun, David, because I don't know, I don't know if you've ever taken on that challenge of helping somebody learn from scratch how to trade.
I actually have, and it's actually just a real fun experience.
And
Definitely.
And so what I'm doing with Melanie is I'm basically doing an unorthodox approach to get her up and where she can trade one or two entities and trade them well. And guess what entities they're going to trade? The power ETFs, those leveraged index ETFs that do.
I was just going to say TNA.
It could be TNA or the T triple Qs. Anyway, right now, you know, I'll just post this. I'm going to keep posting this until the market figures out which ways it's going to go. You know, how do you ride a bear? Same way you ride a bull, in the direction it's going. And Michael Gibbons wrote a book, and I love what he has to say. You know, we cannot direct the wind, but we can adjust our sails. And I know, have you ever done any sailing?
I have.
And you know how, like, you can actually sail into a headwind, but you can't go directly into it. You kind of have to tack, right?
Right.
But you
Right.
still make progress. And,
Exactly.
And right now, isn't the market a little bit like that? We got a little bit of a headwind, but we're still making progress a little bit at a time. Here's a market update for this week. Here's where we were last week. We were asking the question, you know, are we getting traction to the downside? And I think it's very interesting, David, in our back and forth every weekend, or for the show. We have week after week, and we've been doing this for, gosh, almost 4 months now, right?
Right.
And week after week, we've basically notched down and hit what the market's going to do the following week pretty consistently, and also provided some really great trades for our members, both our joint members and our individual members. So, you know, coming out of last week, we were, you know, S&P broke the 50, and then we were searching for support. NASDAQ was at support. Russell, you know, was looking for the next stop, which was hopefully support. and then a lot of questions about the outside earning influences, and then fear run wild with some of the international aspects. I think as far as this week goes, the outside influences, because we're trying to get into toward, not towards the ends, but just about, the major earnings are out of the way. We have several, growth stocks will be reporting next week, so I think earnings are going to be less of an effect. And it's going to be more or less the news-driven ups and downs. And so we find today that the S&P is bouncing, the NASDAQ is bouncing, but it's bounced right back to resistance. I'm going to be adding an index to cover it really quickly, and I'll cover the NASDAQ or the NASDAQ 100 because the NASDAQ 100 actually relates better to TNA and the Qs. And then the Russell's bouncing, but it's bouncing to, guess what, resistance. Does that mean the market's going to flip over and go into a bear market? I don't know. Here's a screenshot of the percentage of stocks above their 20-day moving average on the NYSE, and as we can see, and I talked about this last week, is we came down and hit a low, and yes, we're getting a little bit of a rebound. But my question over the next, I would say, 4 to 6 weeks, are we just going to get in the meat grinder here, where we have to, one, adjust our expectations to lower profits, and also take smaller positions. And then if we do like we did last year, towards the end of August, we got a nice little run up, come back down, and then towards the end of September into the first part of October, we got a really nice rally through the end of the year. And as you guys are, you like to say, what's that saying you guys have? We don't trade what we think, we trade what the charts tell us. Mm-hmm. That's exactly where we find ourselves today. Zip over here to the charts. Tesla. We've made some really good money on Tesla. You guys had a really great trade on that earlier, and we've been doing really well on just trading Tesla, huh?
Mm-hmm. Yep.
So on the S&P, the chart on the left is the daily chart. The chart on the right is the weekly chart. And what we're seeing is we're getting a really nice reversal basically off the 100-day moving average. But look where it's running into resistance at. It's running into resistance right back at the 8-day. We still have the 20-day sloping down and the 50-day kind of rolling over. So each one of these moving average lines will function as a point of resistance. And so while we are bouncing, not really nice bounce today, if you look down here, we have hardly turned the momentum over at all. Matter of fact, the momentum indicator is still pointing down, although some of our other true strength indicator and the stochastics have started to turn up. And now, in my research, David, what I don't necessarily like to buy this first bounce, but I like to see, let me get my pencil. I like to see that, basically that first bounce, because these have a tendency to fail, go up and then drop. I like to see it, but if it goes up, drops back, goes up, drops back, and puts in that lower high or a equivalent, or lower low, higher low, or an equivalent low where it's double testing this level of support, oftentimes that's a really great place to get into a trade, and that's what we'll be looking at to be trading the TNA trades. Mm-hmm. So S&P, again, good positive move today. It's a little bit light on momentum. The composite, well, I'm going to put up here basically NDX, which is the NASDAQ 100. Very similar chart to the NASDAQ. One of the things that I noticed yesterday, you've got this really nice level of support here, and now we're basically forming another level of resistance. The question is it going to be a flag that, a regular flag pattern where here's the pole, here's the flag, and if it breaks, we're looking at down in here? Or are we going to bounce back up to the 20 and then roll back over? We'll see what happens. I mean, those are the levels, though. I mean, strong level of support here, and then we'll see what happens when it gets back up into these other moving averages, because right now the NASDAQ 100 has held the 50-day moving average. And we pop over to the comp. We'll see that on the comp that has more stocks in it is actually bouncing up off the support into the resistance of both the 8-day and the 50-day moving average. The Russell, I've been looking at Russell primarily all of this week. We're getting a nice rebound. We popped up through the 8-day after making a real nice bounce off of this support zone that has been in place for, oh gosh, since just about the beginning of the year. Back in December is when that first formed, as you can see over here on the weekly charts. So what are we going to do? I asked them the question, is this a potential rally to move into a longer term, or moving back up to the highs that we've had previous in the year on the indices? Or is this going to be a sucker rally, and therefore we need to keep majority of our stuff in cash and only do the smaller type trades? So that's where we're at with the indices. Some positive indications for the week at this end, because one thing on the Russell that I do like, we've got some nice positive divergence happening on some of the indicators, as this has made a new low. And I think that's all I have for the indices, David. It's yeah, the market's in correction, but it may be doing a little bit of a rally attempt.
Okay, well, thanks a lot, Dennis. That was really good as always. Yeah, my take is, I'm just more apt to look at what leading stocks are doing, and we don't have a lot of patterns on either the long side or the short side. Definitely really have anything on the short side.
Yeah.
But have a few on the long side. But if you look at Facebook and Under Armour and Tesla and some of the recent leaders in the market here, I mean, you'd be going Skyworks Solutions, another example. I mean, what's the problem? What correction?
Yeah,
I mean,
exactly.
the stocks, they all look good. Some of them are making new highs. Tesla broke out this week. So, I mean, for me, that's kind of the indicator that I use, and I don't really see a whole lot of reason to go run for the hills right now when I look at it from that perspective. And the Russell, we've been here before, and the S&P looks like it's a nice upward trend channel still. So we've been here, done this before, and it's just a matter of, will that trend continue, and we're going to find out. But,
yeah, exactly. Yeah, I agree wholeheartedly that with that, and it is becoming it's becoming more and more indicative that you're going to get those stocks that like a Tesla, like a Facebook, like a Uber, that have done that are going to be doing really well. You're going to get a really nice move, and but you said, and I also agree with and say that it's not so much the stock market, but it is a market of stocks.
Absolutely.
So
absolutely.
I think your screen is now visible.
It is, yeah. And I was just going to, we've been talking about August is typically a really slow month. It's been anything but that. It's been wild and woolly in the indexes, but not so much with the leaders. Most of the leaders are just hanging out near highs, really taking this correction, if you want to call it that, in stride. I mean, it's really not been that big of a deal if you're in leading stocks, and we've been locking down some pretty serious gains here. Our portfolio is now at an all-time high, and we just locked in a 17% gain this week in Tesla, and in the last couple of weeks we locked down 14% in Facebook and 11.5% in 58.com, and that's just to name a few. We have a whole bunch of others, which is again why we're at an all-time high. We're already up $1,700 for the month of August, and we're only 8 days and 9 days into it. So it's just from trading what you see. And ignoring what we see on TV and hear about, and the doom and gloom and all this stuff. We just trade what we see, and we focus on leading stocks that are featured in IBD typically that have strong fundamentals, and we're just looking for the technical patterns and trading what we see. And you know, it's been all systems go so far. In fact, it's been one of our busiest months. So much for the summer doldrums. So our trading plan is we don't chase stocks as they're making new highs. Instead, we let them pull back and come to us, and we buy support and sell resistance, and we just trade what we see. So Tesla is a great example of that. We have a stock here that's been in a downtrend for quite some time, and then it started to tighten up here, and then it exploded higher. We initiated our first trade in Tesla here. We sold half of our position at this red arrow here as it was hitting resistance. Let it pull back. We bought the half we sold back here at support, which, by the way, coincided with the initial purchase. And then this week we sold the entire position as it was breaking into as it was breaking out. So we buy support and we sell resistance or sell strength, and you know, you want to be selling your stock when everybody's excited about it and it's moving up, and that's what we do. Stratasys is another example, another great trade for us. It was in a nice uptrend here with the trend channel. It had pulled back, and then it exploded higher on an earnings announcement, and we were fortunate enough to lock that gain in, and that was just a real simple trade. It was a nice, you know, 7% gain for us in 3 or 4 days, I think. So again, it's just trading what we see, buying support and selling strength. So so we don't chase stocks. We practice trade size risk management. That makes it easy for us, or easier for us, to hold through times like this where the market's not doing so well, because we have no more than 5 to 7% of our portfolio in any one position. So, you know, if something really bad were to happen and we were to take a 10% loss on a position, it would be an overall impact of our portfolio of just 1%. And when you have that kind of risk management in place, it makes it easier to hold through the volatility that we've been seeing lately, knowing that if something catastrophic were to happen, the impact to your portfolio is minimal. And we rarely take 10% losses. Usually they're very, very small. So that's just an extreme example, and it's an example for more math purposes. So anyway, we're at a point where we don't really care, honestly, where the market's going, because we're just trading what we see. We know what patterns we need to see on the upside. We know what patterns we need to see on the downside, and we just trade what we see. And that's the object of these webinars, is to show these patterns to you, tell you show you how to trade them, and then of course we want to hear from you and the success you've been having trading them. So in the market, there's 3 things you need to know: uptrends and how to trade them, downtrends and how to trade them, and changes in trend patterns and how to trade them. And right now all the action has been on the uptrend side. The pullback off highs pattern is one of the best patterns that we look for. We're looking for stocks that are confirmed uptrends above the 50-day moving average, that have pulled back in an orderly manner towards areas of support, which is usually a trend line, the 50-day moving average, or some area of lateral support. So this is Spirit Airlines. As you can see, it broke out here, clearing this blue line, and has pulled back in a nice orderly manner towards areas of support, which was the original breakout point, plus the 50-day moving average. And you can probably draw a trend line here too. So there you have 3 levels of support. The stochastics are way oversold short term. So this is exactly what we like to see, and all we need to see to take a trade here is for this stock to break above the pink line, and that's when we'll initiate our long side trade. So the other patterns we look for in uptrends are trend channels, and this is a really easy trade because it's the support and resistance are clearly defined. As you can see here from Qihoo, we've got the stock that's in an uptrend. We have support here, resistance is up here. It's pulled back to support and is trying to make a move back up to an area of resistance. So we initiated a trade on this earlier this week as it broke above this pink line here, and we're hoping that it'll go up here to trend channel resistance, where we'll look to lock in some nice profits. And then the final upside or uptrend pattern we look for is the right side of the cup crossover. This is more for stocks that are building new bases. They typically form cup patterns, so when they're headed down, they're building the left side of the cup, then they consolidate for a while in a sideways fashion, which forms the bottom of the cup, and then the right side of the cup is when they're rallying back up to an area that was once resistance, and we want to be catching them as they're starting to build that right side. So this is 500.com. This is a perfect example of a stock that's in a cup formation. We have the left side of the cup here. We've got a consolidation here along the bottom, forming the bottom of the cup, and we're just waiting for it to break above this red line here and take off and start building the right side of the cup. And you can see there's a, for a retest of the highs, it's, there's about 14 points there, which is pretty nice percentage gain. So we are just waiting on that one, and just take that trade. We just need to see it break above the pink line. So those are the three uptrend patterns that we look for, and that's really where it's all about right now. We're not seeing any real double tops and short patterns setting up yet, so it's a little premature to talk about change in trend patterns from up to down, and it's also premature to talk about short sell patterns, but we could be getting there. We'll see what happens when the indexes, if they continue this bounce, and we'll see if when it rallies up to areas of resistance now, we'll see if that forms some short sell setups. But for now, it's still all about the long side. However, we're not seeing an abundance of patterns like we have. It's kind of no man's land right now, so we're just going to work with what we have. We have 4 small positions right now. And we're just letting the indexes do what they need to do, and there will be a time when we're going to have a lot more setups either on the long side or short side. So as you were saying, Dennis, it's a good time to take your wife to Monterey or do whatever else you want to do to rest and recharge the batteries and go out and do fun things with fun people. And we just trade what we see. So sometimes we're really, really busy, and other times, like right now, it's, take it easy time, and that's good. It's healthy. It's constructive for us, and the key is recognizing that and not trying to force things. The worst thing you can do is have like a monthly goal. I got to make so much money every month in the market, and that will, because then you're pushing, you're doing things based on your terms, and the market doesn't care what you want. It doesn't care what I want. The market's going to do what it's going to do, and we just have to let the market do it and be prepared to make the most of it, and let our buy rules take us in, let our sell rules take us out, and let it be when there's not a lot of setups. So that's kind of where we're at, and we'll be resuming doing these webinars live on September 5th, the Friday after Labor Day, and so please be prepared for that, and come to us with questions, and bring the stocks you want us to look at. We love doing that and hearing from you and answering your questions and going over stocks with you. So we're really looking forward to that. In the meantime, we do have a 15-day free trial at allabouttrends.net. You can go there, sign up for that. You get everything our paying subscribers get for free for 15 days, and so you can literally trade alongside us. You'll get all the setups. You get the education on the setups. You'll receive trade alerts when a stock on our watch list triggers a trade. You'll receive alerts when we're locking in profits or if our stop has been hit. So you can literally trade in tandem with us and learn more about what we do, and we invite you to take advantage of that. And that's about all I have, Dennis.
David, that's awesome, man. And I know that, and I don't know if we mentioned this earlier. I know we talked about it before we pushed the record button. Was that you're presenting tomorrow at the? I think I did talk about this. You're presenting tomorrow at the TOPS group, which is trading options for profits, and then you will be making a presentation at 9 o'clock on Friday, the 22nd of August, at the Money Show.
Yep. Yeah,
So,
I'm really looking forward to that.
And
But
so,
for both of those things.
and I'm going to be coming down and hanging out with you at the Money Show for a while, and we're just going to have. I look forward to that. And
Great.
so, let me switch. What am I going to do here? One of the things. There we go. You mentioned Kihu and Save and WBAI. I'm looking at some setups for next week that are looking potentially promising on the T triple Qs. That's the 3 times the leverage on the Qs. It's going to depend on how it does its support and resistance, and then TNA, of course. And then also, I was stopped out of SWKS by following my rules today, but that's okay. But I may have to get right back in it if we get a confirmation that to jump back in the trade. And I also like Kihu, and Palo Alto Networks is looking like it has some good potential again also. So those are some of the stocks that I'm watching for next week.
Yeah, and on Palo Alto, they report earnings on September 9th, I think. So it's realistic to assume that there could be a pre-earnings run on that one.
You betcha. And that's a good way to, pre-earnings run is a good way to pick up a really good 5, 10, or even 15% or more, depending on what's going on with earnings. I want to remind everybody with active trend trading, similar to what Dave was saying, is we show people what to trade, when to enter, when to exit, and we talk about strategies to use to minimize your risk and maximize your profit, and then also what to expect. This is where we're at right now. Currently in cash, since we began our timing service, we're up about $8,143, and for the year, our margin account is up 21%. Our IRA account is up 36%. I start every year with the objective of having 60% of my trades be winning trades based on the system, and that's been very accurate over the years. And then I shoot for a yearly return of about 40%. So we're pushing towards those objectives, and I agree with what David said about I do not want to have I don't say, oh my gosh, I have to make this much per week, because trading is much like having a sales commission job. 1 week or 1 month, it's going to be, you're going to really knock the ball out of the park, and then there'll be other weeks or months like we're having kind of a slow month like we're having right now, when you're not going to get quite as much. Isn't that right, David? It is like sales, isn't it?
Yeah.
Like a commission thing. I want to remind you,
it's also like going trick-or-treating on Halloween. Some doors you're going to get a lot of candy, and other doors are going to give you an apple or one little piece of candy and send you on your way.
Yeah.
So you just have to know that, hey, this is how it is, and as long as I keep going from the next door to the next door, I'm gonna keep accumulating candy.
Yeah, without a doubt. And I just want to show everybody what we're looking at with the subscription on active trend trading. And then some of the stuff that I told you we were working on some stuff, David, and here's some of the stuff that we're working on that will be launched sometime within, the rest of the year, is refining the active trend trading system for traders with longer time horizons. Some people have restrictions on how they trade. They can't. They have to hold a position for so long. Maybe they work for a broker, or somebody in their family works for a broker, and they actually have to get approval to trade. And so we're looking at some refinements that will basically be help out those kind of members. And then Power ETF alerts and strategies, training courses for beginners, like I shared with what I'm discovering with my sister-in-law, which has been a lot of fun. And more. And I know that you and I, when we get back together, when we go live again, we're working on some special stuff for people to want to, will hopefully come listen to and become members of our services. So with that, David, have a great time at Tops tomorrow. I will have a great time at my golf tournament.
All right.
Okay.
Sounds good.
Hey, everybody. Remember, As usual, trade wisely and trade profitably. Have a absolutely fantastic weekend, and we're signing